Let us begin.
Okay, good morning, everyone. My name is Su-Ling Ting, and it is my honor to be the President and CEO of the Ottawa Board of Trade. Welcome to another one of our webinars designed to help the members of the business community gain information, inspiration, and hopefully be inspired for innovation as we go through COVID-19 together. The Ottawa Board of Trade continues its work in being the voice of business and representing the interests of our business community with our government and officials, our health officials and decision makers, and working with our business leaders to support the entire business community and start looking toward a recovery as well. Just to give you a few updates, we continue to work with this city on the Economic Partners Task Force, working with them on how we can stage a successful recovery here in Ottawa, capitalizing on our unique assets here in Ottawa, and really encourage all of you to continue to follow the parameters set out by Ottawa Public Health. You may have seen that they have launched a community engagement link. We encourage you to provide information through that link about your opinions on how we can recover. In addition to that, they have been promoting the use of masks, non-medical masks, as you go out and about to do any essential errands or tasks that you need to do in our community. And we encourage everyone to continue to look for opportunities to buy from local independent businesses, many of whom have been at the front line of this pandemic and the immediate recipients of the impact of the countermeasures. So we encourage you to do that by continuing to order takeout, to buy online, to buy gift certificates, and to promote our local businesses in our community. From an advocacy point of view, we have several policy committees who have been continuing on and several who have ramped up to address specific issues. We're very grateful to our speakers and presenters here today because access to cash has been one of the preeminent issue on the minds of our businesses as we get through this. And so we appreciate all of their hard work and their collaboration, and we continue to want to collaborate with these organizations as they support our business members. We're looking strongly toward what recovery could look like, and invite all of you to stay engaged with the Board of Trade, either through our programs, but also through our policy committees, and spreading the word about the work that we're doing, and we appreciate your support. So at this time, it's my pleasure to start our program. We want to start by saying thank you to our community partner, the Ottawa Citizen, and our event partner, Enbridge Inc., for making this possible for us. And of course, today our presenting partners are the BDC, the EDC, and the RBC. And today we have a panel of experts to share with you. Please welcome Mary Ann Wensler Weeby, and I'm sorry, Mary Ann, if I've said that wrong, BDC, Vice President, Financing and Consulting. Welcome to Jeff Keats, who's the District Manager at the EDC, and to Carrie Batt, who is the Vice President of Business Markets in Ontario North and East for RBC. Welcome very much, and we're looking forward to your presentation.
Thank you. So, Lynn?
We're just about there.
Okay, good stuff. And shall we put it in presentation mode? Perfect.
There we go.
Awesome. Thanks so much, Su-Ling. Really delighted to be here. And thanks everyone from Ottawa Board of Trade as well. So it's my pleasure to take this opportunity to join you today. So this presentation is intended to give you as entrepreneurs an overview of the measures available to businesses through federal government programs and BDC initiatives as well. And in order to help SMEs weather the effects of the COVID-19 situation as well. And what you're going to see here is, why do we have 3 different organizations speaking about a similar topic? Because the reality is it's not a one-size-fits-all, and these programs work best when we are working together as well. So next slide. Before I get started on the relief programs available to entrepreneurs, so Lynn, am I going to be doing the slides, or are you going to move them?
I can move them for you if you'd like.
Yeah. All right, that's awesome. So we'll move to the next slide. I thought I would just do a little bit of an overview and introduce BDC first. So
This one?
I'm number 2. Sorry, they're not advancing
Lynn,
on my screen.
If I can jump in, Lynn, I think maybe if you're on split screen, you've shared the screen because I can see all of your slides versus in presentation mode.
Yeah.
So you shared the wrong screen.
Oh,
There we
sorry.
go. We're amongst friends. Thanks, Rob.
Thank you.
I was just in the middle of sending you a private chat to tell you.
Thank you.
So while we're getting that set up, though, I will take a moment to introduce BDC. So BDC is Canada's Bank for Entrepreneurs, and we're Canada's development bank. So we complement the role played by private sector financial institutions, and our shareholder is the federal government. Now, we've been supporting entrepreneurs for 75 years in all industries across Canada through 3 lines of business. So financing, consulting, and advisory services. So with that as well, we offer uninterrupted capital to entrepreneurs at all stages of their business, from startup, venture capital, to exits as well. So in our conversations with SMEs, the top 3 impacts to their businesses during this time is really the ability to keep employees on payroll, the ability to keep their businesses open, and a big concern about the ability to repay debt. And when I talk to entrepreneurs, the conversation goes something like, what can I do now that can have an impact, and how do I sort out which programs are best suited to my needs? So Lynn, I'm still seeing that the slides haven't moved, so I'm not sure what.
So Lynn, try stop sharing and then restart it and pick the other screen there you go.
There we go.
Now share and pick the other screen.
So we're on about slide 3 now. And I'll keep going. It's a bit intuitive at this particular point. So what are things that businesses need to do right now? And then we're going to talk about some of the programs, and then my colleagues from EDC and RBC are going to add in as well though. But really what we start, the first thing we encourage entrepreneurs to do is really focus on their priorities, and that might be redefining their priorities for their business as well. Like that, can they continue operations but in a different format? Is there new opportunities that they can explore during this time as well? From there, once they've redefined their priorities, the next thing is around planning cash flow. As you start to make changes to the way you do business over the short term, there's a corresponding effect to your cash flow. And as you're planning these changes, take the time to understand the financial impact these changes and develop a cash flow plan that reflects these changes. And then third, after you've revisited your short-term priorities and refined your cash flow, now's the time to really estimate and understand what your working capital needs are, specifically over the next 3 to 6 months. Now, this is where I get a lot of pushback. A lot of entrepreneurs say, how can I do that? My income, my revenues have been interrupted. Where do I start? I don't know. And then I say, well, you know what, let's reverse engineer this and work it backwards to say, what as a minimum are your cash flow needs? What are the payments that have to be made? Rent, equipment, mortgage, that sort of thing. And let's take that into consideration when we're doing that forecast. we should also take into consideration if you're retooling your business to do something different as well. And with that, it should give you a working capital number that covers your needs for the next 3 to 6 months. So from there, then we explore the program. So if we could go to the next slide, please, slide 4. And this is the $40,000 working capital loan that is administered through the government. It's called the Canada Emergency Business Account. So Lynn, not seeing that move forward just yet, sorry.
Okay, I have moved it forward.
Okay, all right, it's not working on my screen, so we'll
I'm
just.
just going to jump in again. When you select which screen you're sharing, it should give you, you're probably seeing the one that's on your one computer like that we're seeing, Lynn, but then there should be a separate one that shows the presentation mode one. So if you select
Thank you, Rob. I'm only using one screen.
Oh.
So I'm not sure why it's not showing.
Yeah, that's really weird. It's not showing the presentation
Oh,
mode.
okay. All right, you know what we're going to do? I'm going to cover these. I think this is going to, so it's being recorded, and you'd have access to these presentations afterwards as well then. And somebody might want to mute as well. I'm hearing a lot of background static, so if we could do that. So the first Canada Emergency Business Access business account is the $40,000 interest-free loan delivered through commercial banks but guaranteed by the government for qualifying businesses. So this is a $25 billion program for small businesses and not-for-profits, and it's intended to help cover operating costs during a period when revenues have been disrupted because of COVID-19. So this program is better, able to position to quickly, help you provide services to your community and continuing to create employment. So small businesses and not-for-profits should contact their financial institution to apply for these loans. Now, it's an online process, so I would say a good place to start is with your bank's website as well. Now, to qualify, organizations are going to need to demonstrate that they pay between $20,000 to $1.5 million in total revenue in 2019. So as I say, it's interest-free. And the cool thing is repaying the balance before December 31st, 2022 will result in a loan forgiveness of up to 25% or $10,000. So that's the CEBA program, quick and easy, and again, we're hearing very favorable things, and my colleague from RBC will talk probably a little bit more about that as well. Now, the next program is for small and medium-sized enterprises. It's the Loan and Guarantee Program that's going to enable about $40 billion in lending, and this is going to be delivered through the banks. Now, BDC and EDC play a role in supporting this program as well. And eligible companies could obtain up to combined $12.5 million through these two lending streams. So the first is a co-lending program for small and medium-sized enterprises. So under this stream, BDC is working with financial institutions to co-lend term loans to SMEs for their operational cash flow requirements. And risk is on a shared basis at 80% for BDC and 20% for the financial institutions. Eligible businesses may obtain up to $6.25 million through this program. So $5 million from BDC, $1.25 from your financial institution. The cool thing about this is the financial institution is going to conduct the due diligence and underwriting. They're going to structure the loan and actually then disperse the loan and fund directly. So it simplifies the process. Only one lender involved. We're letting the FI do that as well. Now, in order to be eligible for this program, businesses must have been impacted directly or indirectly by COVID-19, and they must demonstrate that they were financially viable prior to COVID-19. Now, the second stream that I talked about is the Guarantee Program. That's EDC's portion. My colleague's going to talk about that momentarily. So on this one too, given the unprecedented economic impact of the pandemic, all legal businesses will be eligible under BCAP, this Business Credit Availability Program. And this includes businesses in the cannabis sector and the hospitality sector, including bars and lounges. Okay. With that, I'm going to move on to what would be, I guess, slide 6, if you can see on the one side here as we move through. But in the event you've exhausted government programs along with the BCAP programs, and there continues to be a need, BDC is also offering working capital loans up to $2 million with very flexible terms and conditions. So for example, a 12-month principal postponement and then reduced principal payments where it it comes due in 3 years. Now these funds are available to supplement your your operating line of credit or for a variety of current business needs as well. So government programs, BCAP, and if there's still a need, then the BDC working capital loan. The next program I'm going to talk about was introduced last week by the federal government and unveiled funding for the Canada, I'm going to just read it, Canada Emergency Commercial Rent Assistance. So this is help being provided by the federal government in partnership with the provinces and territories. So it's for businesses that simply can't afford to pay rent at a time when their operations are shut down due to COVID-19. So small business tenants paying less than $50,000 in rent who've temporarily ceased operations or have seen their revenues drop by 70% can apply to have a 75% rent reduction for the months of April, May, and June. So this program is being administered by Canada Mortgage and Housing. And that was introduced, as I say, last week. So now, I've talked about a number of programs already, and my colleagues are going to touch on a couple of more as well. And it's my hope that, again, it's not a one size fits all, but we're hoping that there's enough programs available that it sustains you through this very challenging time. So the best place to start, all right, would be a conversation with the commercial account manager at your house bank, okay? They know you, they know your business, they know your history, and are best positioned to guide you through what next steps look like. So I would say start there. BDC and EDC have a long history of working together to support Canadian SMEs, so we work very closely with each other, trying to find the best solutions to serve entrepreneurs. So I've talked about different programs and our working capital loan and things like that. If you visit our website, bdc.ca, there's a couple of other tools available. We have a COVID-19 resource guide for businesses that has all the websites of the different government programs from federal right down to provincial programs as well. I encourage people to go back and visit those frequently. The reason being, programs change, they get enhanced. We've seen that with SEBA and a couple of others as well. So it's the best way to stay informed and up to date on the various programs available. We get a lot of questions, like, can I apply for different programs? And, and yes, you can. There's some programs that lend themselves to being available to concur in other programs as well. So use that. And then lastly, too, we have a COVID-19 business planning toolkit on our website as well. It covers a number of topics around employee communication, risk operation management, again, how to have that difficult conversation with your suppliers, your customers, and things like that. But the idea with this particular toolkit is hopefully it'll help you get through this, but maybe help you position your company, for the other side of getting out of this particular situation. So a lot of good tools that way on our website. And I thank you for the time to talk with you today. So I think the next speaker would be Jeff, my colleague from EDC, and I'll hand it over to him. Thank you.
Yeah, thanks, Marianne, and thanks to the Board of Trade for having us here. Hope everyone is keeping healthy. So I'm Jeff Keats with EDC. I lead two teams. I lead our team that covers Ottawa and Northern Ontario, and I'm also leading our technology team for Ontario. And I hope the audio and visual is okay today. I'm on my iPhone. I think we're all learning to be agile as a result of the crisis, and we'll see how agile we can be with Lynn going through my slides for me. Hopefully it works out, and if not, we will adapt. So I'll try and be quick today to save time for questions, but what I'll go over is quick EDC overview, including our solutions that may be of relevance to companies right now, how we are tweaking those solutions as a result of COVID, and a couple of things to keep in mind in terms of data, rules, tips, and then some key contacts. So we move forward to slide 2, and we'll see if it works, and if not, we'll be agile.
Has
But
slide
an
2
EDC,
shown?
it has not shown me. We're still on slide 1, so we'll keep trying to get to slide 2. But if not, I can adapt on the fly.
Thanks, Jeff.
No worries. So EDC Export Development Canada. Normally, our job is to help Canadian companies grow and do more business internationally. So selling to the US, selling to other markets, expanding their global footprint. During the crisis, we've had to pivot, and so we're also working with domestic companies to help them with their needs. We're not competing with bank partners like RBC, nor are we competing with BDC. To Marianne's point, we're working collaboratively with these institutions. We are a partner-preferred organization, and a lot of our solutions would go hand in hand with those partners to support Canadian companies. Traditionally, our solutions are meant for certain things such as providing financing capacity, freeing up working capital, risk mitigation, but a big focus of ours right now is providing liquidity relief to companies that need it. Our programs are continually evolving, to Marianne's point, so I encourage companies to keep track of this. What we're hearing today on May 5th could be different 2 weeks from now. I know at EDC we keep tweaking our programs and also exploring what else we could be doing, and I know our partners are the same. I'll move on to slide 3 to talk about some of our programs, and Lynn, we're still on slide 1 with you, but I'll share the slides after. So a couple of our solutions I want to talk about that are applicable now. The primary one is what I would call our credits insurance program or our accounts receivable insurance program. This is insurance against non-payment by your buyers, your customers. And obviously this is a risk mitigation tool that can be customized for companies of all shapes, sizes, sectors. So if you're manufacturing, retail, services, software as a service business model, we can customize this insurance to meet your needs. We are seeing companies now use this for contracts they've entered into recently where the payment is not yet due. If your buyer has already defaulted, this insurance wouldn't be applicable, but we're certainly seeing increased interest for this, which tends to be the case. A lot of our solutions are counter-cyclical, and companies come to us when there are times like this. Our insurance can also be used for more than just risk mitigation. It could be pledged to a financial institution to get that institution more comfortable in providing funding to you. And also it can be a sales tool to allow companies to get more creative in how they structure their sales contracts, or as they start to enter into new relationships as they go through this crisis. So that was one solution. Another solution that is top of mind is called our Export Guaranty Program, which will be on slide 4. This is basically a loan guarantee program. This is an existing program we've had for years, and it partners with banks such as RBC, where we provide a guarantee to a loan that RBC or other banks would provide. Typically, it's between 50 to 75% of that loan amount. It's not buying down bank risk, but it's allowing a bank to get more comfortable providing lending capacity to an existing client or to a prospect. It can be used in a lot of different ways: operating lines, term loans, shred facilities for foreign inventory. Now, it's worth noting this would not take an undoable deal and make it doable at the RBC perspective. What it will do is allow Carrie and the team at RBC to get more creative or to take on more risk, whether it's international risks or just different structures that they probably couldn't do in their existing sandbox of risk appetite. So it's meant to add capacity to the banks. Another program that adds capacity to the banks would be on slide 5, which is our we call our bonding program. Oh, there we go, slide 5. And this program, bonding is a terrible name. What it really does is this is another guarantee program to bank partners like RBC, where it helps a bank if they're issuing a trade instrument like a standby letter of credit, or if they're issuing foreign exchange facilities, and we're seeing a lot of fluctuation in foreign currencies now. Typically, if a bank is issuing one of those instruments, they will take collateral from their customer, often cash collateral. The EDC guarantee replaces the need for the bank to do that. So it's not a funding solution per se, but it frees up working capital or cash that companies can then redeploy for their day-to-day operations. So I've just talked kind of high level about some of the existing EDC solutions. There's a lot more. But next, if we go to slide 6, I'll talk about how we're customizing some of those. And there we go. So the export guarantee, which I spoke about, that's a loan guarantee where we partner with whether it's RBC or other banks. As a result of the crisis, we are allowing payment deferrals for existing customers and new customers. We're getting more creative in our structuring. Of course, we're now willing to work with domestic companies, not just export companies throughout the crisis. So that's one program change. Our credits insurance program, that is the non-payment program. We are, again, taking on more risk for that. We've increased our buyer limits by up to 50% for existing buyers. We are getting more flexible in terms of how we assess the risk. We are open to taking on a lot higher risk. And so right now we're actually underwriting applications where companies apply because they entered into a contract for goods, services, technology sales. Maybe it was April 1st or even earlier, and we're looking to provide insurance in case the buyer is unable to pay, and certainly taking on more risk than we used to in that program. Third change, I didn't speak about this program very much. It's used less often. It's our direct lending program, our financing program, where we're part of a syndicate of bankers. Usually these are for much larger clients that are bigger than the needs of our loan guarantee programs. For any existing clients, we are allowing payment deferrals on principal and interest. And the fourth kind of tweak is for our claims process for insurance clients. We've streamlined that claims process to make sure we can pay out those insurance claims in a more timely fashion, because companies really need that liquidity. Now, if we move to slide 7, one of the bigger changes we have as a result of the crisis, and Marianne spoke about this, is the Business Credit Availability Program, or the BCAP. Of course, through BDC, it is a co-lend at a 80-20 risk share. With EDC, it's a guarantee we provide to a bank. Now, it's a bit different than our standard loan guarantees, which I spoke about. Those are typically between 50% and 75% guarantee. This BCAP is an 80% guarantee. It's also more streamlined than our traditional loan guarantee. Now, there are trade-offs with that. This guarantee can only be used for either an operating line of credit, a new one, or for a new cash flow term loan. It's not meant to upsize existing loan facilities, but to add new ones. And we realize some companies wouldn't have a borrowing base that would allow them to increase their existing line. So this is meant to add more flexibility and creativity to the banks. It is a fixed guarantee fee of 1.8% of the full loan amount. And it is for loans of up to 6.25 million. Now, this will differ a little bit bank by bank, as each bank will have certain internal metrics they're going to look at. And much like our loan guarantee program as well, if you wouldn't have qualified for banking pre-crisis, then this may not be the right solution for you. You might want to look at some of the other solutions to mitigate risk or get working capital. How this program will also work is it does run through the banks, the same as the BDC BCAP. But what will happen is if you're talking to your banker and they think you could be a good fit, they will email you a link to the EDC eligibility check. That takes less than 15 minutes for you to fill out. You normally find out on the spot if you are eligible for this program. The vast majority of applicants are. And then your banker will receive an email with the go-ahead for them to proceed with their due diligence. Worth noting, it's important you make sure you have that email address correct for your banker, because we have seen some cases where the email address was incorrect and the bank just didn't get the notification. Now, there are a couple of things to keep in mind. So we move on to slide 8. Thanks, Elaine. This is as of last week, so I can update on the fly. But for our BCAP program, that's the guarantee. As of last week, we had over 1,400 companies had applied, and that's going to grow exponentially because more and more bank partners are coming online. As of the end of last week, we had 40 banks and credit unions as partners, and I believe from BDC as well, all those banks and partners are coming online. CEBA also goes through the bank. So I would encourage you to talk to your banker on CEBA. As of the end of last week, over 19 billion had been funded. It's actually about 20 billion as of today. And that 20 billion has flowed to, I think right now the number is about 550,000 companies have accessed CEBA. On the EDC side of things, we're certainly busy, as is BDC and RBC. For our insurance program, we are seeing tremendous interest by companies. We're getting to the point where by the end of this week, we'll have received as many applications as we would in the average year, between a 9 and 12-month period. And so we are taking measures to make sure we address all that interest. We're doubling the size of our underwriting team. People are working weekends and evenings. But that does mean you're going to have to be proactive, which leads me to slide 9. Just a few things to keep in mind. If you do have a representative at EDC, RBC, BDC, please contact them. Please reach out to see what programs might work for you, noting that both CEBA and BCAP go directly through the bank, but things like the EDC insurance, you would go directly to your account manager. If you don't have an account manager, we've got contact details on our website and call centers. They can help triage your needs. Also worth remembering, as Marianne mentioned, these programs are stackable at the BCAP level, so you could benefit from both EDC and BDC BCAP programs. And as Marianne said, I think she beat me to this, but it's not a one-size-fits-all. There's a lot of programs out there, and each company will have unique needs. But also the criteria will differ program by program. So for example, we saw the wage subsidy when it was first launched may not have fit the needs of all technology companies based on their fast growth. There has been some change as a result of that, including some of the IRAP programs that were launched. As mentioned, some of these loan guarantees also, if you were not commercialized pre-crisis, those loan guarantees may not be the right fit, but there are other programs. And these programs are dynamic, they keep changing. So stay up to date on our COVID-19 page. And then on slide 10, it was just a list of some contacts to keep in mind, whether it's the Government of Canada, Trade Commissioner Service, BDC, EDC, and of course, your account manager at RBC or your bank. So I've thrown a lot at people. We're certainly gonna take some questions at the end, but now I'm happy to pass it over to Carrie and RBC.
Thank you, Jeff. I'll just grab my slides. Okay, so hello, it's my pleasure to talk to you this morning about how Canadian banks, including RBC, have responded to the COVID-19 pandemic, especially as it relates to access to capital. We talked a lot this morning about collaboration, and we often collaborate with BDC and EDC on a regular basis. But what I'm going to share with you today is specific to RBC. However, all the financial institutions have been working closely with the Canadian Bankers Association on how we can make the most positive impact we can to our clients during this time. So we do have similar offerings. So RBC's early response was to arm our teams with the authority to provide immediate cash flow relief to our customers. On this slide, I wanted to make you aware of the relief programs for individuals. Although this is a business audience, the ability to take advantage of these relief measures can help you reduce your personal draws from the company for a period of time. It also would apply to your family members and your employees. So it could have a positive impact for you as well. For example, how it might help the business owner, not only by reducing your own monthly draws, but if your employees maybe could defer some of their expenses for a period of time, they might be more open to agreeing to a work sharing program so that you don't have to lose your talent that you work so hard to obtain and retain through layoffs. So for personal clients, we are enabling clients to defer their mortgage payments, their any kind of term loans, auto loans, as well as their credit card minimum payments for up to 6 months. We have put in some self-serve options so you can go into your online banking and enable yourself to skip those payments or set your minimum credit card payments to 0 on your own if you'd like. We are also waiving a number of fees, especially the fees for things where people would normally have to come into the bank to do. We are also making sure that anyone can reach out to an advisor at RBC. And if you need to refinance something or do some credit restructuring, we will provide personalized support. And for those clients who decide to defer their minimum card payments, we will also reimburse them 50% of their credit card interest for the period of time for those up to 6 months. So this is available for any of our clients who have been negatively impacted by COVID-19. At the same time, we've put into place our relief program for business clients. Our account managers were armed with the authority to defer principal payments on term facilities for up to 6 months. provide temporary increases to operating facilities, and allow clients to defer minimum payments on their credit cards. In addition, for the health and safety of both our clients and our employees, we wanted to remove any cost barriers to using digital alternatives to attending the branch. So we've waived the setup fees for new enrollment for cash management solutions. We've waived stop payment fees and ATM mini statement fees. If your business is experiencing any financial hardship as a result of COVID-19, you can either contact your account manager, or you can call the advice center if you do not have an account manager to discuss your options. And as Jeff and Marianne have already shared with you, Canadian banks are also delivering 3 key programs on behalf of the Canadian government. And all of these programs are designed to assist with operating expenses, so rent, payroll, utilities, and other regular payments. And all businesses must apply with the financial institution they had as their main business account with as of March 1st, 2020, and their existing loans had to be in good standing. The Canada Emergency Business Account is likely the most familiar with you, to you, as Jeff said already. Many over 500,000 businesses have taken advantage of this program. And it is for businesses that had an annual payroll in 2019 of between $20,000 and $1.5 million. It's interest-free until December 2022. And if $30,000 were paid before December 31st, 2022, the remaining $10,000 is forgiven. So to enroll in that program, it is done, as Marianne said, online only. You really have to have your 2019 T4 summary of remuneration paid. Have that handy, because you'll have to enter information from that form on the application. And it's important to note that with this program, the banks are facilitating the loan for the government. Other than the eligibility requirements the government has set out, there is no underwriting. The business owner or signing officer makes an attestation that the banks do not verify, and all loans are subject to a possible audit by the Canadian government. So the application is online, and for our clients at RBC, you should see a banner in your online banking inviting you to apply. If you use our online banking premium service, RBC Express, you would receive a special code from your account manager that allow you into the application portal. For the BCAP programs, the process is different. For these loans, the bank takes responsibility of completing the due diligence and for underwriting the loans in the manner we have agreed to with our partners, EDC and BDC. While Jeff and Marianne have described the details of these loans programs, what I would like to emphasize is that your best step is to contact your account manager. Have your trusted advisor meet with you, review your situation, and recommend the solution that is right for you and your business. This may be one of the BCAP programs, but it may be restructuring your existing debt or a more traditional term loan or operating line. It may mean gaining access to inexpensive equity through your home, or it may mean referring you to other programs such as Futurepreneur, or for our rural clients, to a local CFDC. If you do not have an account manager, I invite you to skip the line at RBC. On our website, there's a link where you can register for a callback, and an advisor from our advice center will call you back to discuss your options. It is wise that you go into these conversations prepared. In most cases, we will want to see your most recent financial statements and a cash flow forecast. Give some thought to these questions so that you can have a productive conversation. So the first is, how has the pandemic impacted your business? If at all possible, try to quantify the impacts in terms of the dollars. Are you open or closed? Are you partially open? What's been the impact to your revenue? What's been the impact to your costs? Have you been able to retain your employees, or have you laid them off? And what has happened to your supply chain? Are you able to bring in sufficient inventory to meet your needs? And what has been the impact on your customers? If you sell business to business, Have your customers been impacted by shutdowns? Have you had to incur additional expenses so that your team can work safely and physically distance at work? And what have you done so far to adapt your business? Have you found a new way to deliver products? Are your employees working from home? Are you cutting some costs? Have you laid off some work sharing arrangements? And then what additional programs have you or may you take advantage of? And how was that going to help you out financially over the short period of time? And then give some consideration to what the new normal will look like for your business as we move beyond this immediate crisis. So in your best estimate, what would be the time frame to get you to previous sales levels? Or after, if you look forward 12 months from now, what percentage of your previous sales levels will you be able to achieve? We know this is new to everyone and nobody has a crystal ball, but try to give it your best and well thought out answer. And that will help us determine the best solutions for you. And finally, although we're not involved in the Canadian Emergency Wage Subsidy, we are encouraging clients to sign up for CRA direct deposit as soon as possible so that you can get your money as quickly as possible. Also, there are other experts who can assist you with the wage subsidy program, and there is more than one. The payroll provider that RBC partners with, ADP, is providing a key role in guiding clients through the wage subsidy applications, and they are also having seminars that anyone can attend to talk about the COVID-19 impacts on their businesses, as well as the wage subsidies. So given that, I do expect that other payroll providers will be doing the same. So if you use one, please connect with them because I'm sure they'd be a fountain of information. I understand this program is maybe a little more complex than some others. In addition, RBC, like others, have put together some information that has other resources available. There are many programs that have been developed very quickly to assist businesses with their access to capital. And our document includes all of the federal and provincial relief programs. And I'll send that out to Lynn so that she can share it with you after this presentation. And finally, RBC has also developed a partnership with Wello, a leading Canadian virtual health company, to make it easier for you to provide important COVID-19 screening information, access to physicians and nurse practitioners for health advice, and resources to support general health, including prescriptions, diagnostics, specialist referrals, and mental health needs. So if you're an RBC client, you can access more information about Wello by signing into RBC Online Banking and look at the offers for you at the top of your account summary. So with that, I will pass it back to Lynn for Q&A.
Great, thank you so much. So a big thank you to our speakers this morning, Marianne, Jeff, and Carrie. I just want to make a little note about Marianne's slides. I will have a PDF version of Marianne's slides available for distribution within an hour or so after our webinar completes, so that if anyone has an urgent need to see some of that information, I'll get it out to you. For the rest of you, I will most certainly include it when we send it the webinar recording. And Marianne, thank you for your graciousness. I don't know what happened there, but we will move on from there. So very quickly, before we go into our Q&A session, because we have some questions already, I just want to let you know about some upcoming webinars that we're doing. So tomorrow we're launching Wellness Wednesday, and very pleased to have St. John Ambulance coming to talk about mental health first aid in the workplace. And on May the 7th, the Business Sherpa Group is going to join us and talk about opportunities and challenges in the talent market for SMEs. Next week on the 12th, we'll have a webinar titled The 3 Roles of a Business Owner, and it's about knowing which role you have to execute at which time in the right proportions in order to pivot your business and move forward. On the 14th, we're going to talk about communications and marketing with CP Business Solutions. And on the 19th, business continuity planning. I'm excited for that one, and that's going to be done by Miami Consulting. So we are going to go into the Q&As. We expect that there's going to be a fair amount because this is a very complicated subject and there's a need for a lot of clarity. We have a question that came in through the chat, and it's a lengthy question and it's multi-part. So Corian from Brand Clarity, if you're there, would you like to unmute yourself and ask your question rather than me trying to paraphrase it for you?
Sure. So we're a consultancy, and so we don't have what you'd call a standard payroll. We bring on consultants who work on projects, and they bill us. And as owners, for a number of reasons, me and the partners in the business as consultants, we also bill the business through our own separate companies and then pay ourselves through dividends and other means, which means that we don't have that handy T4 summary of remuneration. Talking with a lot of colleagues, we find a lot of consultants are in exactly the same boat. They don't have, you know, a standard payroll. They don't pay themselves that way. So we fall right into the crack of SEBA. Is there any discussion about what to do about consultants and other business models that don't fit with the traditional payroll?
So who would like to address that? Is
I guess, and I'll start and then I'll defer to yeah, maybe Carrie or Jeff as well. But I guess, you know, there's going to be unique situations, and I don't, my response isn't, you know, overly robust here, but it's a matter of, this is where you need to probably talk to your accountant as well to understand if one program doesn't work, you know, is the wage subsidy program a better alternative for you as well. We were on webinars last week where there was a lot of robust conversation from you know, again, those professionals, that, you know, the accountants, to offer that advice. So that would be, I guess, the first step that I would suggest you take. I'll open it to my colleagues as well if they have anything different.
Yeah, it's Jeff here. I would echo that, Marianne, to talk to your accountant and also potentially to talk to your banker in case they have seen a similar instance, because it's typically going through the banks for these programs. And because of that, I'm not well equipped to answer it, just because we don't see those questions. But I don't know, Carrie, if RBC has come across that specific type of need yet or not.
We have seen that need, and you know, with the SEBA program, because we are just facilitating the government's program, we don't set those guidelines, and so there is, you know, it definitely would not qualify under SEBA. So when I look at that particular question, you know, basically each consultant and even the owners, your self-employed people, and it's quite possible that you'd have to look to one of the personal relief programs that are available, such as CREB, CERB, or something like that, because the business relief program wouldn't quite fit because of the T4 situation.
Right.
However, you could, I mean, the business itself, because it does hire out to contractors, may be eligible for something, but not the SEBA program. It can't be adjusted for that.
Okay, and I guess thank you. And the second part of that is, how long will these programs continue on for? We're doing okay at the moment, but mostly because of projects that were contracted before COVID started. We do expect a significant echo effect by the end of June, as most of our clients or the sectors that we work in, their budgets contract. So how long will these programs be offered for? And is there any thinking around that sort of the echo effect further in the year for, again, mostly consultancies?
Yeah, it's Jeff here from EDC. We're certainly expecting a wave 2 and a wave 3 across a variety of industries. And so there's no timeline for this program. Right now, we are given some funding through the government to use. You know, that funding is just starting to deploy, but I fully expect we're going to have access to those funds through the summer and into the fall. But there's been no real discussion in terms of the end date. There has been no end date given to us in terms of how we would deploy those programs through our partners. I don't know if Marianne or Carrie, you've heard otherwise, but that's what I've heard at Team EDC.
So yeah, I'm of the same sort of positioning as well. You know that let's deploy these. We are waiting and anticipating, you know, a further wave as well. And I was given the impression maybe it's under BCAP or so that like September seems to be, you know, a time frame where organizations will reassess, you know, what a next step would look like as well. Carrie?
So for our own relief programs, the loan deferrals, for example, we are right now, we're set up till the end of June. And so the 6 months can start anywhere between now and the end of June.
Okay.
However, you know, again, it is depending on what's happening in the economy at that time, right? The goal is to try to help see our clients through to the end of this and to the other side. And so, you know, we'll sort of play it by ear as time goes along.
Yeah.
With the BDC co-lending program, I think I was just reading it yesterday, so it's top of mind. I believe September 30th, we have to have an accepted application. However, you know, the client can draw down the funds into next year as well. So,
Okay.
so again, that is today. If things go on much longer than we expect there to be flexibility in that. That's the current. For CEBA, there is a deadline for applications that is formal, and I might have to call a friend, but it's either July 15th or July 31st. I can't remember exactly. But you still have some time. So.
Yeah.
Thank you.
Corinne, were your questions addressed then?
Yes, I didn't get the answer I was hoping to. You know, it does strike me that the most of the programs are set up for a very traditional business model.
I see.
You know, business models have really changed a lot in the last decade. We see a lot more gig working. We see a lot more casual contracts without being on an official payroll. So I guess in one way I'm a bit disappointed that the program isn't more reflective of different business models and that it's going down a very traditional payroll kind of route. But yes, my question did get answered. I just wish it was a different answer. Thanks.
Thank you. We had a comment in the chat from Steve Ball. He's with the Ottawa-Gatineau Hotel Association. Steve, I was wondering if you had any specific questions on behalf of your members that you'd like to address the panel.
Thank you, Lynn, if I may. So I represent a number of hotels in Ottawa, but I also sit on the Hotel Association of Canada working group for hotels across Canada, the 8,300 hotels that we represent. And as you can imagine, they've been decimated by COVID. Occupancy levels are 5%, but they come off a very successful number of years. And what I'm hearing, I'm not an operator, so I will share with you feedback that I get, is that the banks are generally not very friendly to the hotel community from a lending perspective. So a lot of them use credit unions, and the BCAP program is very clunky and cumbersome and non-friendly to the hotel community. And the reasons why, what the recommendations are that are being given to the Minister of Finance office at Parliament Hill is it desperately needs to be streamlined. They need to remove some of the personal guarantees, and they need to look at how reasonable doing an appraisal or an evaluation of this at this time of the property is when going forth for a loan. And I think the message I'd like to leave is that this is an industry that's fairly critical in Canada to a lot of other industry. And although it's vulnerable and forecasting revenues is difficult to do at this stage, if not impossible, as you can imagine, by not being industry friendly, the long-term repercussions, not only from an employment perspective, 300,000 employees in Canada, but the ripple effect to other industry by not having a healthy hotel industry will be seen for years and years and years. So it's less of a question and more of I think a desperate plea is be more flexible and streamlined in the lending model right now for hotels. Thank you.
Thank you.
Thank you, Steve. So do we have any questions coming about how the process actually works? Is anyone struggling with understanding who they're supposed to reach out to? Marianne, I know that when we were preparing for today's webinar, we talked about some of the very interesting numbers about this program and the sheer volume that your three organizations and the other financial institutions are dealing with. Maybe if we could just share some of those pieces of information in that conversation a little bit.
Yeah, absolutely. So we did have a look back as well, and like a lot of organizations, that first couple of weeks was mission critical, working with our existing clients. So we have done principal postponement payments for over 35,000 of our clients. So well over half the portfolio are on some sort of principal postponement right now. And we went back and compared this time last year from March 16th, that dreaded date, till now, and we have entertained 4.5 times more dollar requests, or authorized that, than it would have been last year this time. So, and I think, Jeff, you talked in terms of almost a year's worth of applications in a matter of 6 weeks. So everyone is working diligently to triage. I think that's it's not a word we would use in banking very frequently, but right now it really is triaging those entrepreneurs to ensure that they're going and taking the next steps, the right steps possible. And I go back to challenges, the economic challenges of 2008-9, and when I compare that to now, how the organizations, the banks, and EDC and BDC work so collaboratively now to find a resolution and quicker. Before it seemed it was a sprint race where we each delivered something individually, where here it really is more of a relay where we're working back and forth to support entrepreneurs. But the numbers are unprecedented, and we're preparing that this is likely going to stay for a couple of months.
Jeff, how about at the EDC? How do you find the volume of inquiries that you're getting?
Yeah, so we are certainly busy, Lynn, in terms of general inquiries. But to Marianne's point, the insurance requests we're getting over a 6-week period equal, what we get in a 9 to 12-month period. The average year. Our loan guarantee program, there are backlogs, and there are backlogs in all programs, despite the fact that for a lot of teams we have doubled or tripled the size of those teams, and we have people working evenings and weekend to keep up. So that's why I do encourage people to be proactive. And as I mentioned, we are seeing some successes. So with over 20 billion funded by the banks now for SEBA, I know it doesn't hit not everyone is eligible, but for 20 billion to be funded in such a short period of time, for over 500,000 companies to have access to that is pretty remarkable. And I'm assuming that at the RBC level as well, things are quite busy, and the team is overwhelmed.
Very much so, very much so. We think about it, we don't have the data. We were following it for the first few weeks in terms of the number of loan deferrals that we did, for example, when we first launched. And it was unprecedented, and people were working night and day to get those processed. I want to apologize to the audience. The wait times at our call centers got extremely long. Our clients were patient and quite pleasant when they got through at the end. But when you drive, we changed our operations overnight, and we went from, I think at the beginning of this we had 4,000 people working from home. Now we have 71,000 people working from home. And as you drive by a closed branch, behind those doors is probably a mini call center. So we really redeployed resources. So the people who used to serve clients in the branch, our branch traffic has really dropped off, understandably. So we redeploy those resources, and they're starting to do outbound calling to try to get to all of our customers. So we're trying to call as many as possible, as well as deal with the clients who are calling into us.
Thank you, Carrie. I can only just imagine the deluge of emails and phone calls that you have all been receiving in all of our financial institutions to try and help out the business community during this time. We're just about at 11:59. If you have any final questions for our panel while they're here and available for you, please get them in right away. Did any of the three of you have a final comment or a parting tip that you'd like to share with our guests today?
I guess, you know what, I'll start if that's all right. And then, so EDC, BDC, and RBC and the FIs are working closely. And I would just circle back, your trusted advisor right now is such a helpful partner with you. And Carrie talked about, forecasts and cash flows and things like that. It's so critical. It's difficult to plan, but the reality is it's so important to try and articulate in numbers so that, help us help you, and as difficult as it is, keeping financial reporting as up to date as practically possible helps you get across the finish line. So thank you very much as well for, inviting me to chat with your membership.
Jeff?
Yeah, I'd agree with that. I think, obviously thank you, but I think keep the communication flowing, keep the information flowing, and also just, be proactive. This is, again, it's not, some of these programs won't happen overnight. If you're looking for a loan from the bank, there will be, the bank will have to go through their process. Even if it is streamlined, you're going to have to, so make sure you are being proactive in your approach.
Carrie?
And I'd just like to say, reach out to us. We do want to talk to you. We are reaching out to as many clients as we possibly can on a regular basis, but we definitely want to reach out to you. We know these are really challenging times, filled with a lot of anxiety, a lot of emotion. Our clients are going through some very difficult times. People are concerned about their health and safety. They're concerned about the survival of their business. They're concerned about their employees. And so we really want to be there to help you. And it starts with a conversation. So start there, and then we move forward from there.
Thank you, Carrie. I see that Dale Conrod's on this call. And many, many years ago, Dale said to me that you need to make friends with your banker before you need them. And I always remembered that. And I always thought that was the greatest word of wisdom. And I think that it just demonstrates that how appropriate his comment was. So I'd like to thank our panelists for joining us today, especially when we stop and consider how much work they are trying to get done these days. And they have taken the time to make presentations for us and answer some of our questions and provide us clarity on these programs. So thank you, Marianne, Jeff, and Carrie, so much for your time today. And we will be sending out the presentations along with the recording link at a later date, usually within 48 hours. So thank you, everybody. Have a great day, and I hope that you have a prosperous remainder of 2020. Thank you so much.
Thank you. Bye now.